Yeah, no, Dwayne, you're correct. The Jumpstart Our Business Startups Act, or Jobs Act of 2012, it was so instrumental for CrowdStreet. It literally was the catalyst for our existence, because what the Jobs Act contained were provisions that were going to enable, which have now enabled, the solicitation, or in essence, the advertising of private security offerings. And this is the first time that was going to occur since the passage of the Securities Act in 1933 that had really locked down private securities from general advertising. And so, this was the event, because that sparked as served as the catalyst, because what we looked at, and I think what the co-founder, Darren Powderly, saw was that if we were now going to live in a world where we could generally solicit or advertise a private equity offering, we could now put that online, and then we could now attract investors to investment opportunities online. So that was just something you couldn't, in the old world of the private days, where you had to have a relationship first leading to a deal second. There was just no fundamental infrastructure in place to really spur the online massive adoption of investing in this way. And so through that Jobs Act, that was spinning that around, and that was creating deal first, relationship second. And that's really what enabled the CrowdStreet marketplace to start and exist, because 506C, which is what we utilized mostly on our platform, is the general solicitation of private equity offerings. So that is paramount to everything that we've ever done since we launched the marketplace in April of 2014.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have Ian Formigle. Ian is a real estate professional and serial entrepreneur with over 20 years experience in real estate private equity, equity options trading, and startups. Ian is the vice president of investments of CrowdStreet, overseeing its marketplace and online commercial real estate investment platform that has completed over 325 total offerings of $12 billion of commercial real estate. Ian is also the author of The Comprehensive Guide to Real Estate Investing and a contributing author at Forbes.com. How you doing, Ian? And thank you for joining us on the show.
I'm doing great today, Dwayne. Thank you for having me on the podcast.
I really appreciate it. For those who are not familiar with your background, would you mind taking a few moments of kind of giving your start in real estate and kind of a little bit about your backstory?
Yeah, absolutely. So my background has always been in investments in one form or the other. I didn't actually start in the commercial real estate industry. My first job, or essentially career out of college, was in derivatives trading. I spent a number of years as an equity options market maker, trading on the exchange floor in San Francisco, making two-sided equity markets, predominantly in the Microsoft pit. And so those early years were kind of the formative phase of me kind of learning, really understanding capital markets, seeing supply and demand, and then understanding and gaining appreciation for things such as volatility and pricing risk. And so after a number of years of trading on the floor in the early 2000s, I began my real estate career, a lot like many investors out there, by just simply doing it myself. I started buying single family homes in California. That was kind of from the 2002 to 2005 period. And so out of that investing experience, then led me to multifamily investing. It was really at that point in 2004 when I'd seen rapid appreciation of California real estate. And being a trader by my background, I like to buy low volatility. I like to sell high volatility. So my rents weren't really moving. My asset values were doubling. And so I viewed volatility as high at that point. And that led me to conduct an analysis in terms of what to do next with 1031 money. And that led me to the conclusion that I should go to Birmingham, Alabama, and begin investing in multifamily. That spurred some friends and family money that approached me and said they would like to participate with me. And so at that point, that embarked on a number of years of a multifamily syndication platform. So for the next handful of years, I syndicated multifamily deals, Class C and B garden style deals. in Alabama, in Texas, in Oklahoma, and Kentucky. And it was kind of through that process, that's where I took the next step up in my real estate career. And then, during the downturn, honestly, so when we had a portfolio of assets that were hanging in there and doing okay, but capital formation really wasn't something that was occurring much in 2010. I started to contemplate what I would do from here. Essentially, would I begin doing more multifamily deals at some point or not? And it was then when a principal of a commercial real estate private equity firm based where I live in Portland, Oregon, approached me and said, "We're about ready to start doing deals again. We have a $1 billion portfolio. We haven't really done much for the last couple of years, but we're ready to start doing deals again. Why don't you just come join us? And you'll learn the institutional, general partner, limited partner game." Of which I said, "Well, I know multifamily. I know how to find it, but I don't really know office, industrial, retail." He said, "Don't worry about that. We'll teach you the domain expertise. You know how to do deals and price risk." So that led to about 4 years at that group. We did about $500 million worth of deals over that period of time. And that really set the stage for what I'm doing now at CrowdStreet, because I got to know the co-founder first, Darren Powderly, and then Torstein, and began discussing with them the possibility of bringing an investment opportunity from my private equity firm that I was with at the time to the CrowdStreet marketplace. And it was in the summer of 14, once the marketplace had launched, but the second deal had just gone live on the platform, that they spoke to me about the need to search for the chief investment officer of the platform, and that they were getting venture capital traction, but this was going to be kind of a key part. And they found the product and marketing person at that time to join, but they really needed this last fourth seat from a kind of key principal perspective. And so I recognized I'd already gone through about 6 months of evaluating the industry, and I thought it had potential, and I thought it would become that online commercial real estate investing would become a real plank of real estate capital markets in the United States. And so I saw a huge opportunity to jump in with a platform that just got started. And when I looked around the table and I saw the diversity of the skill sets that had been assembled up until that point, I thought to myself, well, I think with the core founders here, we've got something. We got a shot. And so that was it. So I joined CrowdStreet in the summer of 14. And now, 5 years later, we've, done 325 or 330 deals and comprising over $12 billion worth of real estate at this point. So it's been a fun run.
Wow. So specifically, you just look over all of the investments, or are you also dealing with sponsors and the investors? What's kind of like your specific role there?
Yeah. So so from the marketplace perspective, so like by overseeing the marketplace, really the deal flow, and today the investors still roll up to me. Now we're in the process of kind of creating the next level of the infrastructure for the investor side, because it's becoming there's a universe of thousands of investors there now. And then on the deal side, there's also, we have a business development team, a capital markets team that is out there sourcing a lot of the deal flow. The people on my direct team are the ones evaluating the deal flow, kind of running the investment committee, kind of so to speak. So I directly oversee the evaluation of the investment opportunities, ultimately leading to the decisions on what goes up or does not go up on the marketplace, and then continue to serve as a thought leader to the investor community.
Can you kind of touch on the crowdfunding industry in general? I know that the Jobs Act of 2012 had like a big, huge impact. What did you kind of see from your bird's eye view?
Yeah, no, Dwaine, you're correct. The Jumpstart Our Business Startups Act, or Jobs Act of 2012, it was so instrumental for CrowdStreet. It literally was the catalyst for our existence, because what the Jobs Act contained were provisions that were going to enable, which have now enabled, the solicitation, or in essence, the advertising of private security offerings. And this is the first time that was going to occur since the passage of the Securities Act in 1933 that had really locked down private securities from general advertising. And so, this was the event, because that sparked as served as the catalyst, because what we looked at, and I think what the co-founder, Darren Powderly, saw was that if we were now going to live in a world where we could generally solicit or advertise a private equity offering, we could now put that online, and then we could now attract investors to investment opportunities online. So that was just something you couldn't, in the old world of the private days, where you had to have a relationship first leading to a deal second. there was just no fundamental infrastructure in place to really spur the kind of the online massive adoption of of investing in this way. And so through that Jobs Act, that was spinning that around, and that was creating deal first, relationship second. And that's really what enabled the CrowdStreet marketplace to start and exist, because 506C, which is what we utilized mostly on our platform, is the general solicitation of private equity offerings. So that is paramount to everything that we've ever done since we launched the marketplace in April of 14.
Mm. Are your for CrowdStreet's investments, are you guys focusing more on the debt or the equity or both?
So mostly on the equity with a sprinkling of debt. Easily 80+% of everything that we've ever done is what we would call joint venture common equity. So the most typical scenario would be if we look across all the offerings that have come to the marketplace since 2014, they are typically leveraged with about 67% loan to cost debt. So you've got the most 67% portion of the capital stack is debt, the subordinate 33% being the equity. The CrowdStreet investor is participating in that 33% of total equity alongside the sponsor and alongside other limited partner investors. From time to time, we do have preferred equity offerings. And in that scenario, CrowdStreet is going to be in that middle stack piece. So now it's not just a simple 2-layer stack. We're now going to see 3 layers. So again, senior debt, probably now a little bit lower leverage, more typically to be more like 60. The preferred equity to go from maybe 60 to 75% of what we'd say in the stack. And then the remaining 25% of total capital, or now subordinate common equity, being brought by some other group. They're themselves the operator, or the operator plus their friends and family. So we'll see those from time to time. We just had one on the marketplace that went off, a couple weeks ago. And then finally, and I'd say this is kind of the most anecdotal scenario, we have had a few debt offerings on the marketplace. We're going to see those in 2 forms. And I would say still today, there's 2 debt offerings live on the marketplace today. They're debt funds. So that's going to be the most common way for us to offer debt to investors on our platform. The reason for that is that we are what is called a direct to investor marketplace. And what I mean by that is when the investor invests in anything on the CrowdStreet marketplace that is a single asset offering or a fund offering sponsored by another group, they are going to become the direct limited partner of that sponsor, of that operating group. And what that means is that means that the group that is offering the investment has to be either the issuer of equity, or in this case, the originator of the debt. CrowdStreet as a platform does not originate debt. That's why you're going to see a handful of debt offerings, but not a lot. It's because we're not a debt platform. We're a private equity platform that has private equity operators sometimes who have debt platforms that will then make their deals available to us. So mostly in debt funds. Every now and then we've had a direct one-off debt offering, and that would be probably like a mezzanine loan. So that's kind of how it goes. But mezzanine loans are going to be, single-digit percentage of everything that we've ever done.
Yeah, I know certain crowdfunding platforms, they do have some of them have some specialties as far as the property types that they offer, because that's their wheelhouse, that's their expertise. Do you guys have a particular property type that you guys specialize in, that you guys work with, or are you guys offering like office, retail, all different types of stuff?
So we will bring all of the major food groups to the platform, but in descending orders. The number one asset class on our marketplace is multifamily. It comprises of roughly 40% of all offerings since inception. After multifamily, you're going to step down to office and hospitality. Each of those 2 asset classes are roughly 13% of offerings since inception. So we've got about 2/3 now kind of assembled. The remaining 1/3 is now spread across all other asset classes, being retail, self-storage, medical office buildings, senior housing, and the like. The only 2 asset classes that we do not have on the marketplace are either raw land or single-family housing.
Okay. Kind of shifting our focus over to kind of diversification in general. Have you guys seen, with the volatility of the stock market, that a lot of capital is kind of pouring towards crowdfunding sites, specifically towards CrowdStreet?
The answer is yes. I would say that we have seen 2 phenomenon over the years. First was just a general kind of understanding of the platform. And then as the exposure grew, then we're seeing kind of scaling of the adoption of the investors. But then what's interesting, for example, like most recently, December was a pretty tough month for equity markets. We saw a lot of equities, kind of spike down in pricing at that point. And that was one of the biggest months it was the largest month of that year for investor adoption. And so I think what we were seeing at that point was investors understanding and acknowledging that the equity markets had had a really good run, and that we were seeing that what was happening in December, nobody really knew, but some people were concerned that what was happening in December was maybe the early indications that the end of that bull market for equities was ending, and that they were then jumping over into hard assets and saying, well, I want to go into an alternative asset class. I want to go into an asset class that is backed by income at the property level, and that one that is more long-term in nature and is not as cyclical, daily cyclical as equity markets are. And so we've definitely seen that process. And I would say that overall, but the overriding theme is not necessarily just kind of a whipsaw effect of what's happening in the equity markets. It's really more of an acknowledgement that commercial real estate should be a part of investors' portfolio, and that it should be a component. Now that component can range from on the low end, high single percentage digits to 30, 40, 50% in the case of someone who's really high net worth. But that's how a lot of investors invest, and it's just that overriding realization that commercial real estate is a component of a diversified portfolio, and that they should put it into their portfolio, and that now they realize that they have an avenue to do so.
Are they also taking that same approach by, looking at the multiple offerings that you have and kind of putting capital in, multiple deals, or are you just kind of seeing them kind of getting their foot in the door and just kind of diversifying going into commercial real estate?
Yeah, so the CrowdStreet marketplace today has 3 different ways that investors can invest. The number one way is still the investor joining, perusing available offerings on the marketplace, and then selecting one or more and then investing themselves. They're making the decisions, they're picking and choosing, and then they're investing directly with that operator. That's still today what we call the bellwether. It is what we now say is kind of the self-serve marketplace. The second way that investors are investing, which is now a rapidly growing way that they are, is through our blended portfolio strategy. And that is in essence a indexed fund style approach. It's a passive approach that each fund, it is marketed for about 90 days. It is then raised, it's pulled down, and it is run by an algorithm. And then so for the ensuing 12 months, the funds that are raised in each series are then algorithmically deployed into roughly 30 to 50 individual marketplace offerings using a blended portfolio strategy that looks for diversification of geography, by asset type, by sponsor type. It does have a scoring mechanism in as well that looks at things like unlevered internal rate of return, level of debt. It will score higher or lower depending upon what the asset class is and so forth. And that's a factor that could create an over allocation to it, an under allocation, or no allocation. But in general, what it's trying to do is blend to kind of an optimized version of the CrowdStreet marketplace over roughly 40 or so offerings over the course of that year. And what that's doing for that investor is, for the investor that comes to the marketplace, likes the platform, but does not know how to begin picking and choosing, well, then now you don't. It's just the equivalent of saying you can buy the S&P if you don't want to pick individual stocks. It's kind of that direct corollary. The third way that investors are now investing through our marketplace is through our privately managed accounts. That's a scenario in which we heard over the course of the last few years, investors coming to the marketplace, getting active, investing multiple times, and then telling us that they want to do this for the long haul and that they want CrowdStreet's advice to continue to do it. That led us to launching our registered investment advisor at the end of 2018 called CrowdStreet Investments. And so now we have a growing investor base that are coming in and opening accounts at a minimum of $250,000 and saying, I want to get direct, customized advice for how I should build a commercial real estate portfolio. You guys have been doing it for 5+ years. You see a lot of deal flow. You have teams in place. You have the ability to really help me kind of get up the learning curve. And so that's what we're seeing. That's the third way. And now we have multiple investors there, and that grows by multiple investors per month. And so those are the three ways that investors are investing today.
It seemed like, because you guys dealing with a lot of large deals, is it for very affluent investors? You mentioned minimum of 250K. Is there just affluent investors or extremely affluent investors? What type of investors are you dealing with?
The minimum investment size on the CrowdStreet marketplace is 25,000. So that's where the relationship would begin. And it is also, it is important to note that it is for accredited investors. And the definition, this is an SEC definition, by the way, is either one, there's two different ways for investors to qualify. One is by income, the other is by net worth. The income test is for any individual that earns $200,000 per year and will do so going forward. They're accredited. If it's joint, it's $300,000 per year. Or if they want to qualify by net worth, it is a $1 million or more of net worth exclusive of their personal residence. So those are the two different paths. So every investor that is active on the CrowdStreet marketplace has qualified as an accredited investor through one of those kind of three different testing mechanisms.
As far as the evaluating deals and sponsors, kind of what is CrowdStreet's process of when a deal comes in? What's like the first step you're looking for? What are you thinking? What are you looking at? What are some of the red flags, and what ultimately gets on the marketplace? I can imagine you probably get a lot of different inquiries and looking at a lot of deals. I know some doesn't pass the test.
Yeah, we can see hundreds of deals per month. And the overall drop, if we think about it from a funnel perspective, for every 100 potential deals that are proposed to CrowdStreet, 5 of them actually make it onto the marketplace. And so that process actually begins out in the field. CrowdStreet has multiple employees that are embedded in all of our key markets around the country. These are people that maybe come out of a capital markets background. And so they have relationships out there. They understand deals, and they know how to procure deal flow. So those people are going to be out there. They are our quote unquote boots on the ground, and they are hunting for best in class operators with best in class deal flow every day. So that's one key avenue of how we're assembling our type of deal flow. Another way that we're doing it is through attending all of the key industry conferences. For example, I'm a member of the Urban Land Institute, and so there's oftentimes opportunities through that group of real estate operators around the country that will lead to conversations and lead to deal flow. The third is inbound. We, as an online platform, we have a lot of visibility, and we get deals every day submitted to us through our online, inquiry. And so there's a lot of noise that can be through that channel, but it definitely has led to good deal flow that it actually has appeared on the marketplace. So of the overall perspective of everything, if you look at the common of all those three kind of avenues, the 100 is now dropping down to roughly 40 or so deals that are at the point where they make it to the investments team. So that is the team that I work with. They are comprised of real estate private equity people that are traditionally coming out of the acquisition side, sometimes out of the debt origination side, but more so on the acquisition side. And so this is a team of individuals that knows how to acquire real estate, knows how to value it, knows how to underwrite it. And it's at this point when we have one of our managing directors out in the field elevated particular deal with a particular group that they think the group is a fit, they think the deal is a fit. Now we're going to really pick that deal up, and we're going to be going kind of soup to nuts with it. And we're going to go through now a 3-step process. The first step in that process is to evaluate the sponsor. So we have applications, we have background checks. As you can imagine, there's a lot of steps that are involved into understanding if the sponsor is eligible for the marketplace. Some of it is eligibility, some of it is also a fit. Just because the sponsor is great doesn't necessarily mean that they're great for the marketplace. They do have to understand some of the nuances of going onto a public platform and raising capital online, and reporting to and cultivating a base of what is now going to become perhaps 200 new investors for them, right? That's the power of what we can do in a single deal. So we have to make sure that there's a fundamental fit there, provided that we get through that background check and kind of evaluation period. Then we're going to move on to the deal itself. That's really where our investments team is going to roll up their sleeves. They're going to go through the pro formas. They're going to go through the third-party reports. We're going to utilize our own third-party data sources such as CoStar and RCA and the like. And we're really going to get to the, does the deal make sense? Does the business plan, stand to scrutiny? Do we think the asset has a going in basis and a going out basis that are achievable? This is where we kind of do like a lot of the traditional work that many real estate operators out there would understand. It is from that second point. So, and that'll involve calls and emails and a lot of research. From that second step, provided that we get past that, so now we have an eligible sponsor that we think is a good fit with what we think is a good deal. Now we're really going to start to evaluate the structure of the deal and the operating agreements. And it's here that we're looking for that kind of third and final fit. Is the operating agreement structured in a way such that is in line with our marketplace standards? And do we think that the key provisions, the preferred returns and the splits and so forth, are the economics modeled fairly for the CrowdStreet marketplace? Now that we've done, 325, 330 deals and $12 billion worth of real estate, we have a lot of data to look back on to kind of substantiate what is in line or out of line with marketplace standards. In the event that something is out of line, we're going to call that out. We're going to bring that to the attention of the sponsor, and we're going to have a conversation about that. And really what it boils down to at that point is kind of a coaching. This is a marketplace, but it's, but it's also a marketplace that has established investor expectations. And so if something is out of line, it will boil down to, well, if it's completely out of line, we're going to say that doesn't fit with marketplace policy. You can either change that or we can agree not to do the deal. More often than not, those lead to amendments and changes. So oftentimes an investor, when you're looking at the deal on CrowdStreet and the operating agreement, we've already gone through a process of negotiation and really coaching and amendment to that. So what you see is not necessarily where it started. Every now and then we may come across something where we feel like it's significant and material enough to kind of make it a gating no go. And maybe in that scenario, the sponsor has perhaps maybe they've already raised capital with those terms, or that's just fundamentally how they do business. Every now and then that's where a deal will die. More likely than not, you're seeing tune-ups of the deal at that step, and then that deal getting approved for the marketplace.
As we kind of talked a little bit about the Jobs Act and how that kind of really blew up the industry, and now a lot of other players are also into this space as well. Is there kind of like a unique thing to that CrowdStreet is different from others, and what kind of makes you guys a little bit different?
I would say that the thing that makes us a little bit different from most of the other platforms is the way that we have been able to utilize the Jobs Act slightly different than some of the other platforms to create scale. Going back to the beginning, and I think this has a lot to do with my own kind of understanding and empathy as a sponsor. So coming from a group that had raised, had done $4 billion worth of deals over 20 plus years, and understood and knew how to go out and raise up to 40 or $50 million of equity for one particular transaction, we knew that ultimately getting to the best deal flow in the country meant scale. And that in a 2014 environment, the scale was not going to be there. This was a brand new thing that was available, and it would start off small, but that the winner or multiple winners in the space would be the groups that figured out how to get this solution to scale. And by scale, I mean 10, 15, $20 million per transaction potentially, because that's going to get you right into the sweet spot of some of the best middle market real estate deals in the country. And so, and also knowing that there was a really good fit in this middle market, because groups like my previous group who could go out and attract institutional capital knew that the interest of that institutional capital to come to a particular transaction really started at about $15 million. It got really good at $20 million, and it completely fell off the radar for them at $10 million. And so we also looked at that and said, and we also know that there's a lot of good deal flow in the United States that requires somewhere between $5 and $15 million of total equity. And that equity size is in essence too big for the little operators, the mom and pops, too small for the biggest institutions of the world. That will translate roughly into a total project size of, call it $15 to $50 million. That's what we refer to as the middle market. And when we take that type of asset and we place it into a growing secondary market, these are the markets like from east to west, or from west to east, I would say, like Portland, Oregon, Denver, Austin, Nashville, Charlotte, right? These are great growing secondary markets where people are moving to and jobs are being created. That we felt like there was a great underlying thesis here of acquiring an asset that was just below the purview of the biggest institutions in the world, but that had really great fundamentals behind it, and that at $40 million was an institutional quality asset, and that perhaps over a 5-year period of acquiring it, adding some additional value to it, and then exiting it, maybe 65 million, now you had the opportunity to attract some of those bigger institutions that would create a more efficient marketplace for the exit, hence creating opportunities to earn outsized returns for the investors who bought it at 40 million. So I think that is the underlying thesis of the marketplace, and we're seeing that every day, and this is what we look for. I mean, when we talk about that deal, that second step in the deal analysis is I'm looking for sponsors, show me an opportunity where you're utilizing kind of in playing in this middle market space, and you may even be utilizing some information that is at your disposal that's not publicly known. That's just, that's inside industry intel to get to a good deal at a valuation that you feel is attractive, and you can show me a path to getting to a more efficient exit. If we can find that, we're on average going to have a pretty good deal.
You had mentioned just a little bit early regarding the technology of your company's, like back-end platform, either for the sponsor side or for your marketplace. Can you kind of touch on a little bit about, or what you could share regarding your technology and AI?
So, going back right to the beginning, so the technology that we built and put into place and continue to iterate upon daily, even today, is really all oriented to raising and managing larger and larger amounts of money from individual investors at scale. And so what scale now means, and today in the 2019 version of the marketplace, we've now seen individual investments where we have procured over 10 million of equity, even $15 million worth of equity from individual investors writing $25,000 checks. So we're now talking hundreds of investors in an individual transaction. And for the offline, traditional operator, that can sound daunting. Wow, I come onto this marketplace, I do a deal, and I now have 250 new investors. And I would say that if we were operating in an offline world, that they would be correct, that you can never manage that number of investors, you can't do it through email and through spreadsheets. You have to do it through scalable technology. And so what we've built is a platform that enables 30 or 40 investors online to feel like one investor offline. I mean, it doesn't scale infinitely, but it scales very, very well. So now we can easily go do a deal, raise $15 million worth of equity, amass hundreds of investors in that single offering, and give the tools to the operator to manage that just like it was a handful of investors. Uploading one-to-many, splicing up the information, sending it out to all the appropriate investors, right? With one click, one email, you're now communicating with up to hundreds of individual investors, and even sometimes in a customized format through dissemination of things like K1s.
Yeah, that's one really big thing, because I've talked to a lot of syndicators, and that's one of the biggest hurdles is the managing of all of the investors' paperwork, going back and forth and making a seamless flow. And sometimes that can kind of derail a deal. It seems like you guys did a lot of work to put into the technology to make sure none of that problem ever exists. So that's pretty comforting.
I mean, one data point to think about is that in the 506C of Reg D environment, which is where we predominantly participate, the maximum number of investors in a single offering is 2,000. So even from the get-go, we were looking towards one day we're going to have 2,000 investors in a deal. And how is that going to look? And how are you going to manage that? And how is one person in one location going to be able to facilitate that transaction? That's what the technology is ultimately designed around, that philosophy.
And what type of genetic makeup of investors do you have? Is it IRA? Do you also have international investors? Is it retail investors? What type of makeup?
Yeah, so it is overwhelmingly individual investors. There have been a little bit, very anecdotally over the years, a handful of like more sophisticated, whether it's maybe a small family office or maybe a small endowment come in. But for the most part, it's the accredited individual. That is who comprises the CrowdStreet marketplace. From that, most of them are residents of the United States. There are some that are not residents of the United States, but if they are investing on the marketplace, it is because they have the ability to pay taxes in the United States. Reg D offerings, whether they're public or private, are really centered around Securities Act, where it's saying that is a national offering. There's another thing called like Reg S, which is an international offering. That is not what is on the marketplace. So we're really looking as that is the key and fundamental question. Can you pay taxes in the United States? If you can do that through an entity and you can invest in that entity, you're good. You're eligible. If you are outside the United States and you don't pay taxes in the U.S., you're really not eligible. And then I think the other thing I would say is that after we've got the individuals, so really some offline or some national, mostly international, and then remind me, the other question was?
IRA.
IRAs, that's right. We have IRA investors come through the platform daily. I would say IRAs comprise something maybe between 20 and 30% of all the dollars. It's probably becoming, that percentage is growing over time. And we're even to the point where we have now built some online integration to a number of the custodians in the self-directed IRA space. So we launched our first 2 or 3. There's another 2 or 3 coming. So we see that the self-directed IRA path as one that's going to continue to expand in the months and years ahead.
Awesome. Yeah, we had just mentioned briefly about your book. Can you kind of tell us what's in it, what people can expect from it, and where can they get it?
Sure. So the book was published a couple of years ago, I guess at this point now, and it really all centered around the idea that it was just education, really at its core. As we built and started to scale the marketplace, and we had investors increasingly now coming to the marketplace, we definitely got the sense that there was an information gap, and where the investors showed up and where we thought that they ultimately should be and where they wanted to be. And so to do that, we said, well, there's no better way to help investors understand the space rather than creating some good content. And so we started to build some good content, and then that basically accumulated and became the ebook, which was published. And really what it was all boiled down is when I wrote all this content, it was just trying to walk through the investor through the scenarios of how do we begin to look at a deal. When we look at a deal, what are the things to look at? What are some of the questions to ask? What are the terms? What are the metrics? How are the metrics derived, and what do they really mean? And then blending into how do you actually start to develop, now that you know how to do one deal, now let's talk about doing multiple deals, because ultimately what we were seeing and what we felt was the underpinning value of the marketplace was through $25,000 minimum investments. Well, now a $250,000 portfolio could be 10 deals, when maybe in the past that was 1 or 2. But if you getting to the 10 deals, well, what does that really mean? Because a lot of these investors weren't really thinking about diversification at the national level. And now that we were a national marketplace, was to really educate the investor, say, you now have the opportunity to diversify across geography, across operator, across asset class, across risk profile. There's so many things to think about. And if you do it well, it can really create a pretty cool, diversified portfolio of investments. But there's a lot to learn. So let's talk about it.
Awesome. Yeah, just wanted to kind of get for my audience to kind of get to know you a little bit more. What's kind of a typical day for you?
A typical day for me is running around from place to place. I think is the within the office is probably number one thing. But within that, what are those things that are going on? It starts off in the morning with kind of assessing some of the plans for the day. Obviously spending a little bit of quiet time in the morning, catching up on emails and things like that. I get more email than I can possibly respond to, but I try to get to as much as possible. From there, it's going to be on a daily basis. We are huddling with the deal team, and we're discussing, the pipeline of offerings that we're looking at. Like I said, if we're talking about that 100 down to 40, well, ironically, kind of today, there's about 40 deals right in the middle of our, evaluation pipeline that we have to really spend a lot of time on. So there's a lot to talk about there. There's also things that I'm going to spend part of my days, working with the team. I've got various team members, and I need to check in with them. So for anybody who manages teams out there, you understand that the power of meeting one-to-one with a lot of your key people, and kind of understanding what's going on and what should and the next steps. is kind of fundamental to the process. And then it is oftentimes a lot of collaboration across the platform. The investments team at CrowdStreet sits in the middle of a lot of things. It sits in the middle of investors and deals. It sits in the middle of even things like marketing, right? The marketing team is fantastic at CrowdStreet, and we collaborate with them day to day to kind of help bring some of that product domain expertise while we're kind of cultivating the message that's kind of going out to the world. So there's a lot that goes into a day in the life at CrowdStreet, and it changes all the time, but it's always centered in deal flow.
Awesome. Yeah, it seemed like you ascended a lot. You're very successful. You guys are doing very good. Can you give us some advice for some probably new entrepreneurs that are listening on the show that, what could they do to kind of help them, advance in their career like you?
Yeah. Well, let's see, taking it maybe kind of two different sides. So from the operator side, I think looking back, one of the things that always helped is that, you can't underestimate the power of just getting out and doing it. You got to study. And so that would be one of the things I did early on that helped is that, like, for example, when I was transitioning out of single family to multifamily, I went out and sought a handful of mentors. There was like 2 or 3 kind of key people that really helped me educate what it was like to own and operate a 200-unit garden style property, for example. For those people out there who've done it, you understand the complexities of the day-to-day. You understand how much can change on the property in 24 hours. Good things can happen, bad things can happen, everywhere in between. And so I think receiving tutelage of some people that have been there and done it, for multiple cycles in particular, is hugely valuable. And then from there, after you kind of get some education, then you got to start somewhere. It's always easier to start a little bit smaller and then scale each step of the way. This is one of the reasons why, for example, we look at track records at CrowdStreet, right? I mean, over time, there's no such thing really, ultimately over time, as a perfect track record, right? This is commercial real estate. It's risky. The risks are going to lead to things that nobody could contemplate or, think that were coming. And those are sometimes going to translate into scenarios that aren't so great, possibly even leading to losses. So I think when we think about those scenarios, it is, as you get going, build and keep doing it. And then there's going to become a point in time where something's going to go bad and a deal is going to go wrong, and possibly investor money, your money, is going to get lost. And then I think the thing from there is to look at that scenario and really learn from that, right? I mean, we always talk about that you learn a lot more from your failures than your successes. And I think in commercial real estate, that's just more so true, in that you don't really even know what it's like. You can't even feel what it's like until you experience a deal that's upside down. And then you see a lot, you learn a lot, and then going forward, you have tons of tools at your disposal to learn about how to do it better the next time. Whether it's, should I have put the same amount of leverage on it? Should I have embarked on the same strategy at the asset level? I mean, you name it. There's so much that goes into the nuts and bolts of it that I think that's the key thing. And then, like I said, and then after that, then the key thing is, pick yourself up and do it again, and know that on the next deal, you'll be better than the last. So I think about all those things from the operator perspective. I think from the investor perspective, I think it's really just wherever you are in your education curve of understanding commercial real estate, is that, just to read. There's a lot of good content out there. I mean, my ebook is just one of the examples. Dwaine, you've got multiple books that educate investors. Take the opportunity to read and understand, and then take the opportunity to actually start applying it. Go to these platforms. Again, CrowdStreet is one platform. There's other platforms out there. Like you can really start to now see this stuff in motion. You're going to start to see things like cap rates, stabilized yield on costs, right? Price per foot at entry, at exit. These are all the building blocks of understanding commercial real estate. So read about them, educate yourself, practice them a little bit, go back, read more, ask questions, keep going. It's worth the time, because in the long run, the returns are pretty compelling if you employ diversification and take a long run approach.
Awesome. Great advice. Really thank you for that. How do we get in contact with you or your company? What's the process?
Yeah, I'd say there's 2 ways, both of which are pretty easy. The first is, you can go to our website, www.crowdstreet.com. From there, you're going to find different ways to engage with the platform. If you're an investor, there's a path for asking investor questions and getting connected to our investor relations team. If you are a prospective sponsor and you want to talk about coming to the marketplace to raise capital, then there's that whole path, and there's a business development team that will follow up with you. There's multiple paths to asking questions, and so it's easy to all navigate from the website. Personally, I'm very easy to find on LinkedIn. I am the only Ian Formigle on LinkedIn, so you can feel free to search me, hit me up. I love connecting with investors and operators out there in the country. I love talking real estate and investing. I can do it all day long.
Awesome. I really appreciate it. Again, you gave us a lot of great information, a lot of good nuggets and advice. So you guys have an excellent platform. I advise our listeners to go please call you or contact you guys to answer any question you may need. Ian, thank you so much again. Really appreciate your time on the show.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.